The Dow recently surpassed 50,000. Could 100,000 be next? Or is that just too unrealistic? I'm your host, James Derrick, president of Smedley Financial Services, and today I'll be discussing the meteoric rise of the stock market and the Dow Jones with guest and expert Mikal Aune.
Welcome to the SFS Power Up Wealth podcast, where we provide impactful insight and expert opinions on timeless financial principles and timely investment topics, preparing you to make smarter decisions with your money.
Thank you for joining me today, Mikal.
Glad to be here, James.
Mikal is the Executive Vice President of Smedley Financial Services. He has a certified financial planning designation and has done an incredible amount of research on generational wealth. Recently, you wrote about the Dow's rise to 50,000, and in times past, that seemed like a lot. Now you're talking about 100,000.
It'll get there someday.
Please explain.
So I guess my experience comes from history and just looking at history and things that I've learned and lived through, because I became a financial advisor in 2006, which was right before the 2008 crash. And that really hurt in a lot of different ways. At that time, I remember the Dow went all the way down to 6,000, and we were hearing people say the Dow is going to go to 2,000. It's going to go even further than it has. And it didn't. And it turned around and started going back up. And at that time, there was a piece that came out that was called 2020 Vision, the case for equities in the decade ahead. And it said the Dow was going to reach 20,000. And at that time, even as a financial advisor, I was like, that is astronomical. That's going to take us a long time to get there, partly because of history, because the Dow had surpassed 12,000 or was flirting with it in 1999. And then it went way down with the tech bubble when that burst. And then it came back up in 2007. It crossed and hit 14,000. And we're celebrating that it finally went over the hump that it had created in 2000. So to go for 7 years to get it to 14,000, then to drop all the way down to 6 and think that it was going to go back up to 20, that just seemed pie in the sky, unrealistic. And it was interesting because I'd show that to clients and they're like, no way. There's no way that we're going to get to 20,000. Now we're in 2026 and we've already hit 50,000. Like, that's just astronomical. It's huge. It's amazing to see that it's grown that far, that fast. And I don't think people expected it.
I entered this business in January of 2000.
It was good timing, wasn't it?
The worst. In January 2000, when I entered the business, everybody was talking about Dow 20,000 as well. There were books, there were T-shirts, there were baseball caps, all kinds of things that would say Dow 20,000, Dow 30,000. And, you know, the bubble burst on technology from 2000 to 2002. The market didn't even bottom until March of 2003. And the Dow had dropped so much. We were making fun of all of these people.
And nobody was thought that 20,000 was even realistic. Because back in 99, weren't they thinking, hey, the Dow's going to hit 20,000 next year?
That is the interesting thing, is that we're all thinking that it's going to happen in the short term. Yeah. And it's good to think in the short term as long as you are also thinking in the long term.
And I think that's part of what I was trying to point out here is it going to hit 100,000? Yes, it will at some point. We don't know exactly how long it'll take, but from where we are, 100,000 is just doubling. And so if we just had a 7.2% rate of return, which is below the normal for the Dow, it would just take us 10 years to get there to be 100,000. That's talking 2036. That's not that far away. So Sir John Templeton and Franklin Templeton, they were the ones that put out the piece that was 2020 Vision. And he said in 2008 that the Dow was going to reach 100,000 sometime in this century. When he said it and the Dow was low, that just seemed like he was up in the night. He had no idea of reality. But here we sit in 2026 and we're at 50,000 already. I mean, we have a lot of years left before we hit 100,000 before the end of the century, and he's going to be right.
It certainly seems like it. Let me ask you a couple questions that I get asked a lot. Do round numbers matter?
No.
Okay.
Short and simple. It's a psychological milestone that we hit it and we hit 50,000. We're there. Did it really make a difference at 50,000 versus 49,000? No.
Should listeners and viewers be worried about hitting new highs? You know, like, oh, the Dow's at a new high, the Nasdaq's at a new high. Should we be worried?
It's interesting because anytime that we hit a new high for the first time, it's all in the news and the media. And then we hit another new high, and then it's in the media. And then we hit another one and another one and another one, and they just stop because it's old hat. We're just hitting new highs all the time. So part of the market and the growth is we're just going to continue hitting new highs because that's what happens. The market grows. At the same time, you do wonder, okay, if we hit 50,000, are we going to have a recession at some point that will pull us off of 50,000? Well, most likely. That's just kind of the ebbs and flows of life where you have ups and downs, where the market's going to grow and then it's going to pull back a little bit and then it's going to grow again. So if the Dow pulled back from 50,000 and it went down all the way to 40,000, am I going to be scared and be like, oh, okay, my 100,000 number is way off? And be like, no, because I still know that the market is going to grow. Is it going to take 10 years or is it going to take 15 years or is it going to take 20? I don't know exactly how long it's going to take to get there, but it'll get there.
So over the long run, the stock market is rising. And I completely agree with you. Let's talk about some of the reasons why that happens.
Innovation is a big reason. Inflation is another big reason, and just global expansion too. So if you think about innovation, especially in the United States, like we have dominated innovation for the world. Right now, we're dealing with AI and just the innovation that's happening. And it was pretty interesting, eye-opening to see that 40% of the AI companies in the world are domiciled here in the United States. That's really good news for us in the long run. Really good news for the United States that innovation is going to continue to happen. Globalization is also going to continue to happen because those companies that AI is needed throughout the world. And so they're going to continue to grow. And so as those companies grow, you're going to see the stock market continue to go up.
Plus, you have the implementation of AI. You've got other technologies like quantum computers and satellite and space and all these things, and they're all taking place here in the United States to a very heavy degree.
It's impressive to see how much it is growing and how much it's going to expand and how much it'll expand the economy as things continue to grow. You'll also see that in the stock market, it's going to continue to grow. One of the things behind it too is inflation. As things inflate going forward, then you're going to see stock prices get higher and higher and higher, and that just pushes up the stock market.
So keeping up with inflation is one of the most important goals somebody can have. And because the money eventually finds its way into the markets, being an investor is critically important to not just growing your nest egg, which is what we talk about all the time, but also just maintaining your purchasing power.
A lot of people have probably heard about the K-shaped economy that we've talked about recently. The K-shaped economy is that you kind of have the haves and the have-nots. And the haves are people that have holdings like stocks or real estate. So they have assets that are going to grow with inflation. And the have-nots are the ones that are renting and they don't have assets. Their income isn't growing fast enough to keep up with inflation. If you really want to see things grow for the future for yourself, you want to be part of the haves where you're owning real estate, owning investments that are going to grow with inflation.
Yeah, it's like playing Monopoly, but not buying any properties.
Yes.
And we've all been there when you don't have the best properties and other people have the motels and the hotels on there. And how many rounds do you make it around the board if you have not purchased the right properties?
Yeah, you just collect $200 and as you pass go, and is that enough to get you through the next round? Maybe or maybe not.
No, you're not going to make it around the board if that's all you've got. And so owning assets is critical in life.
And equities or stocks, they're one of the best things that keep up with inflation and grow. So that's why there's always times when you might be a short-term pessimist thinking, what does it look like for the future? Are we going to have a recession? Things like that. But I'm always a long-term optimist because I see that things are going to grow over the long run. There will always be ebbs and flows to life, but it will grow.
Thank you, Michael, for coming in today.
Thank you.
Thank you for joining the Power Up Wealth podcast. Smedley Financial is located at 102 South, 200 East, Suite 100 in Salt Lake City, Utah, 84111. Call us today at 800-748-4788. You can also find us on the web at smedleyfinancial.com, Facebook, Instagram, Twitter, and LinkedIn. The views expressed are Smedley Financial's and should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities offered through Osaic Wealth Inc., member FINRA SIPC. Investment advisory services offered through Smedley Financial Services Inc. Osaic Wealth is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Osaic Wealth.